Hi there. In this video, we explain how Spring 2026 stamp duty changes may affect first-time buyers across the UK property market.
Hello and welcome. We're Pro Tax Accountant, a UK firm that helps people just like you make sense of really complex tax rules. Now, if you're dreaming of buying your first home, you've definitely heard of stamp duty. But the rules have just had a major shakeup, and honestly, getting it wrong could cost you thousands right out of the gate. So today, we're going to break down exactly what these 2026 rules mean for you. Let's get you ready for that big purchase. So let's kick things off with a pretty shocking number, £307 million. No, that's not a lottery jackpot. It's the extra tax that first-time buyers paid in just 1 year after a temporary tax break ended. That one figure tells you everything you need to know. The property ladder just got a whole lot more expensive to climb. And that really brings us to the big question, doesn't it? The rules have been reset, the goalposts have shifted, so what do you actually need to know before you start looking? Well, that's exactly what we're going to answer over the next few minutes. Here's our game plan. First, we'll look at the new reality for stamp duty and what exactly changed back in 2025. Then, and this is a big one, we'll see if you pass the all-important first-time buyer test. After that, we'll get practical and calculate a real-world tax bill, cover some tricky situations, and finish up with how to avoid some really common and costly mistakes. Okay, let's dive right in with the basics. What on earth is stamp duty? Put simply, it's a tax you have to pay the government whenever you buy a property or land in England and Northern Ireland. The official name is Stamp Duty Land Tax, or SDLT for short. The system is called progressive, which is just a fancy way of saying you pay tax in slices. The more expensive the property, the higher the rate you pay on the top slice. The most important thing to remember, this is a major upfront cost that you absolutely have to factor into your budget from day one. Right, to really get a grip on where we are now, we need a quick look back. For a little while, the government had a temporary tax cut in place, which made buying a home cheaper for a lot of people. But that's over now. The relief ended, and that's created the new set of rules we have for 2026. So here's how it played out. Back in September 2022, things were looking great for buyers. The government boosted the tax-free amount all the way up to a really generous £425,000. But the party didn't last. On April 1st, 2025, that extra help just vanished. The old, less generous rules came snapping right back into place, and that pushed costs up for pretty much everyone.
And this table really shows just how big that change was. You can see the tax-free limit dropped from £425,000 down to £300,000. The maximum property price where you could even get any relief at all fell from £625,000 to £500,000. But look at this bottom line, this is the real kicker. The number of homes on the market completely exempt from this tax for first-time buyers plummeted from 62% all the way down to just 41%, a massive change.
Now, just because you're buying for the first time, don't assume you automatically get this relief. This brings us to a really crucial point. The government's official definition of a first-time buyer is incredibly strict, and it's where so many people get tripped up. Okay, so here's the official line from HMRC. A first-time buyer is someone who has never owned an interest in a residential property, not just in the UK, but anywhere else in the world. The key words there are never owned and an interest. That can mean even a tiny share. Basically, your entire property history anywhere on the planet is what counts. So let's be absolutely clear. You will not qualify if you've ever inherited a property, even just a small share. If you owned a home years ago but sold it, sorry, you still don't qualify. Owned a small holiday flat in another country, that counts too. And here's a real trap. If you're buying with a partner and they've owned a property before, the government treats you as a single unit. That means neither of you gets the first-time buyer relief, a huge one to watch out for. Okay, so let's assume you've passed that tricky first-time buyer test. Now for the bit you've probably been waiting for. How do you actually work out what your tax bill is going to be under these 2026 rules? Here are the new tax bands. It's pretty straightforward. The first $300,000 of your property's price is completely tax-free. Then, for the portion of the price between $300,000 in 1 cent and $500,000, you pay tax at 5%. You only pay the tax on that slice. Let's make it real with an example. So let's imagine you're buying your first home for £400,000. It's a nice round number, and it falls right in the middle of that relief band. So let's break down the math. It's a simple two-step calculation. The first £300,000 of the price is taxed at 0%, so that's zero tax due on that part. Easy. Then you look at the remaining bit of the price, which in this case is £100,000. That part is taxed at 5%, which gives you a tax bill of £5,000. And there you have it. The total stamp duty bill for a $400,000 property is $5,000. Now, remember that temporary relief we were just talking about? Let's see what this exact same purchase would have cost you before April 2025. And this chart just says it all, doesn't it? Under the temporary rules, a $400,000 home was below the tax-free threshold, meaning the bill was a lovely round zero. Today, under the 2026 rules, that exact same purchase now comes with an extra $5,000 cost right at the very beginning. Right. We need to talk about something that is absolutely critical, and to be honest, it's pretty brutal. It's known as the cliff edge. If your property costs even one single pound over £500,000, the relief doesn't just get smaller, it completely disappears. Just look at this comparison. For a property priced at exactly £500,000, you still get the relief, and your tax bill is £10,000. But if the price is just $5,000 more at £505,000, you fall off the cliff. You lose all the relief and have to pay the standard stamp duty rates. Your bill suddenly jumps to £15,250. Let that sink in. A $5,000 increase in the property price leads to a $5,250 increase in your tax bill. Ouch. Of course, not every house purchase is simple and straightforward. Life's more complicated than that. And there are a few key nuances that first-time buyers especially might run into. So, a few other things to keep on your radar. Thinking of buying in Scotland or Wales? Just be aware they have completely different property tax systems with their own rules. If you're not a UK resident, you can expect to pay an extra 2% surcharge on top of everything else. And here's a professional tip if you're looking at shared ownership. You actually get a choice. You can pay all the tax up front on the property's full market value, or you can pay it in stages. It's a big decision with pros and cons, so you really want to run the numbers on that one. With so many rules, cliff edges, and nuances, it is really easy to make a costly mistake. So this last section is all about practical, actionable advice to help you steer clear of the most common errors. So how do you protect your purchase? It comes down to 4 simple steps. 1. Verify your eligibility. Don't just assume, check. 2. Make sure you're budgeting using the current 2026 rules, not some old article you found online. 3. Do not miss the 14-day deadline to file your return and pay the tax after you complete, because the penalties are not fun. And finally, honestly, the smartest thing you can do is get a professional to double-check it all. It's the best way to make sure everything is right. All right, so to wrap things up, what are the key takeaways here? First, the stamp duty relief for first-time buyers is way less generous now than it was. Second, that first-time buyer definition is incredibly strict and catches a lot of people out. Third, that $500,000 cliff edge can cause a sudden, massive tax hike. And finally, with all this complexity, getting some professional advice really is the best way to go. And just a quick disclaimer, please remember that the information in this presentation is for general guidance only. It isn't a substitute for professional tax advice, and tax laws are always subject to change. So, if you're getting ready to buy your first home and you want to be sure you've got all the tax implications sorted, our team here at Pro Tax Accountant would be happy to help you navigate it all with confidence. You can give us a call on 079 856 8912 or drop us an email at info@protaxaccountant.co.uk. You can also find more information on our website, and please do subscribe to our YouTube channel for more explainers just like this one. So we'll leave you with one last thing to think about. With tax now playing such a bigger role in the upfront cost of buying a home, how do you think this might change what first-time buyers do in 2026? Will it change where people decide to buy, or maybe the types of homes they go for? It's a really big question, and one that's going to shape the housing market for years to come. Thanks for watching.